Hello everyone, welcome to the Ichimoku daily analysis for the Euro-US dollar FX for Thursday, July the 30th. Well, a change of colour of the candle body today, and the two previous days were red bodies, which means that the bears were in the ascendancy. The bears made net gain for the day, net progress, and the size of the body on the previous day was quite large, which means that the bears made solid net gain. But today, the bulls have made net gain on the day from open to close, and the candle is green, and that means that the bulls have made that net gain. Just looking at the trend is still down. We had a lower high and a lower low on the previous candle, which means that we had a first time frame downtrend. And the Kijun-sen and Tenkan-sen have failed to act as an area of support for the market. The market's finding support around this whole number at around 140. And the low of the previous candle and the current candle have traded down to around that level, and there's been some buying coming in. Just looking at the configuration of the highs and the lows, the market has made a lower high but a higher low, a slightly higher low, only just, or we could call that and should call that an equal low. That means that the downtrend is still intact, and in bar chart terms it's what we'd call a borderline inside day, which means indecision. It means that the bears have lost strength, but it doesn't mean that the bulls are gaining any strength, because they couldn't begin a new first time frame uptrend. Now, if this market does rally, we'll be rallying into this zone of resistance again, and there is potential for that to happen. So this is quite a large zone, and if we do rally into there, we should probably expect some more downside price rejection. If the market does continue on the downtrend, we do have close by support, and the support is very close at the top of the Kumo. So the market should be interacting with it's around 139.93, and the market should find some sort of support down there if the downtrend does continue. In candlestick terms, again, we have what we call a tweezers bottom pattern. We have a downtrend, and we have two lows here that are approximately equal. And that's quite a significant pattern, and generally it works out to be a fairly strong indication of the end of a first time frame downtrend. We do need confirmation of that pattern, and we need to look to the high of the current candle for that to be taken out for confirmation. So today, the high of the current candle becomes very important, and the low of the current candle. But there's probably a little bit more upside potential in this market if that high is taken out. But remember, we're trading into resistance. So even though that's the case, very short-term trading, yes, there is potential. Trading off these daily charts, it's very risky, because the potential for any price appreciation or depreciation is just not there.